Hello there, Maverick traders. This is Rob Reinhold. We are on the Market Roundup. It is June 22nd. I cannot believe June is almost over. So let's talk about today. Today was a pretty boring normal day, except for someone forgot to tell the NASDAQ 100 that it was supposed to be a boring day, because really, the rest of the market didn't do a whole lot. Now, we did hear from Chairman Powell. He testified yesterday that the Fed was serious when last week they said they're going to raise rates at least 2 more times. And again, the market didn't care. It didn't care last week. It didn't care this week. We had the NASDAQ 100 pretty much holding the rest of the market up. I mean, look at this, at the internals of this market. Look at the advanced decline line. It was 2 to 1 negative. So for every one stock that went up, 2 went down. And we take a look at the numbers. The Dow didn't go anywhere. The S&P was up 0.37%, which is probably just the NASDAQ 100 stocks that pulled that up. Look at the Qs, 1.2%. That's a good move today. And small caps. Small caps didn't participate at all. In fact, they were down over 1% for most of the day, closed down 0.75%. Oil got hammered, gold got hammered. This is a story of 100 stocks that really held this whole thing up today. Now look, I know you say that's bad, that's not going to fly. We saw this all through May. Remember, 100 stocks held this market up while the rest of the market floundered. And what happened at the 1st of June? We got a burst from the S&P. We got a burst from small caps. We got an up market that was really good, and we made some really good money off of it. We're simply back to where we were in May, where the rest of the market is looking sluggish, and the NASDAQ 100 is trying to hold it up. The question is, can it hold it up? Let's take a look at the charts. Here we have the S&P. We got the breakout. We had the nice high base. We had this nice run. And look, over the weekend in the trading room, we said, hey, we're likely due for a pullback here. We said, look, the market should have a pullback here. It would be very healthy for the market to have a pullback here. And if the market pulls back, we need to be buyers on that pullback. Well, guess what? It's here. We got 3 down candles, and we got our reversal candle today. This is a bullish engulfing candle. It gapped lower and closed all the way up at the high. All we need is one more green candle, and this is a confirmed bull pullback. And I don't care how you feel. You have to be more bearish. Bullish than bearish. I don't care how you feel. I don't care what you think. In bull markets, and this is a bull market, we have 2 moving averages that are sloping a lot higher. Every single pullback and high base should be bought. Look, I have no idea what happens over the next week or 2. This could fail miserably. But remember 2021 when we just kept buying every pullback and every high base and we killed it in 2021? And then in 2022, when the market went into a downtrend, we simply did the same thing. Yes, you have to be on the bull side here, even if, fill in the blank, whatever you say, even if, it doesn't matter. There's a bull market here. Let's take a look at the NASDAQ. Same thing. We had a bull market. Every time it pulled back, you wanted to be a buyer. Runs up, bases, breaks out. We have a pullback. We have a pullback. We have a bullish engulfing candle here. This is a bull pullback. Yes, one of these bull pullbacks will fail. And if you go bullish there, yes, it will sting a bit. But remember 2021. If you sat out all 2021, you missed out on some huge gains. We're going to ride this trend until it tells us no longer to ride it. Once we start to break down below 20-period moving averages, 50-period moving average, then we'll start to get a little bit more defensive. But right now, the trend is higher. Again, all we need is one more candle tomorrow for a confirmation. Now let's come over here to the heat map. And this heat map is going to convince a lot of traders to say, you know what, I don't buy into this rally. I won't buy into it. And they're right. Look, it's all Microsoft, Apple, it's all Google, Amazon, Tesla. That's it. I mean, take a look at some of these sectors. I mean, industrials, real estate, energy, utilities, basic materials, dreadful day today. Absolutely horrible. Look at financials. Financials got hammered as well. So look, I get your hesitancy. I understand it. I'm right there with you. I don't feel like being bullish. But remember, this is the same thing that happened in May. And the NASDAQ 100 pulled the rest of the market up with it. We're very, very highly likely to see the same thing. That doesn't mean it's going to happen, but you want to be in the things that are working well. Take a look at healthcare. Healthcare is doing great. Consumer cyclical is doing great. Consumer defensive is doing good. So you don't have to go chase the things that aren't doing well right now. You can chase the things that are doing moderately well and make some really great trades on those. So let's talk about where we are here. We've been at a +3 now for the last month. Once we broke out of this range, right here, we went to a +3, backed off slightly at one point, but it's been nothing but up. We were at a -1 for the week, saying we want to see a pullback. We think there is going to be a pullback. We've had the pullback. We got the reversal candle. We're ready to go now back to more of a +1, +2 for next week's price action. Now, this is predicated on tomorrow there being a green candle. If it's a red candle, then we don't have a confirmed pullback yet, and we still have to be a little bit defensive. We can't really open up the floodgates on the bullish side. So let's look at a couple trades. Now, I pulled most of these trades from Joe Jensen's Wednesday session, his midweek trading room where we meet together as a firm and in real time, and they talk trades. I've been pretty busy lately, so one of the great things is when you trade with a firm, with a team, you can rely on the team sometimes. So I have a couple slots of trades that I need to make tomorrow. I don't have a lot of time. I'm just going to go use some of the ones that our other professional traders gave us. This one looks really good. This here is Dropbox. DBX, it's in the tech or communication services sector. And this is one of the harder trades for a new trader to make. This is called a high and tight base. Most high bases, they make a run up and then they go sideways for a while, waiting for a moving average to catch up to it. And then they break out. These high and tight bases, they typically slope a little bit upward and then they break out and run. That's what we got here. Short term, 27. If you're willing to go out a couple weeks, I think 28 is your target on this one. But Dropbox looks good here. So any combination, vertical spread, diagonal spread, even just long stock, straight calls, I think looks good here. It's all working here on Dropbox. Next up is the trade desk. Now, I talked about this trade last weekend in the trading room. I took the trade early last week. I did a diagonal call spread, which is, here's the risk graph, and 78 was my upper end here. So this is a bidirectional trade. If it just goes nowhere, goes sideways, I'm happy. If it goes up, I'm happy. That's exactly what this trade has done this week. It hasn't gone anywhere. But if it just hangs out here, tomorrow my 78 call is going to expire. I'm really happy about that because I think this thing is about ready to break out. So I like this one next week on a breakout of this ascending triangle high base. I got a target of short-term 80 on this, and I think that is no problem on trade desk. Let's go into a sideways play here. So this is Cheniere Energy, LNG, and we played this one sideways a lot, really over all of February, March, April, because it was just stuck. Look at these moving averages. They were just stuck flip-flopping, and then all of a sudden it started to actually move outside of the trend. When it did that, okay, no more sideways plays on it. You can see it bottomed out, and it's been working its way back up into the range. Hey, you know what? This is back on my radar now. It came back on my screener for sideways stuff. So I like this one for sideways, and it looks 150, looks like the perfect point here. And ultimately, it's 150 up to 160, and then 150 down to 140. This is the range. So you could play a 140, 150, 160 butterfly. I think to do that butterfly, you've got to go out probably to the July monthlies. If you want to go a little shorter term, you have to do the 145, 150, 155. But I think this one looks great for a sideways play here in the natural gas sector. And lastly, let's talk about a short. We're always carrying shorts at Maverick with our basket trades. We always want to be long the strong, short the weak. And this here is Estee Lauder, EL. And you can see it's been working its way down after this gap of bad earnings. And look at the weakness in this thing. This thing has been so weak. Now, look, this isn't quite the march of death. We use the term march of death of a stock that just keeps going down and down and down. We called it on like Bed Bath & Beyond and stocks like that. Look, Estee Lauder is not like that. It's still up at $200 a share. But look, it's been extremely weak lately. What we love is when these extremely weak, when the weakest of the weakest stocks have rallies from 175 up to 205, a $30 move, about a 17% move in 5 days. Those are great shorting opportunities a lot of times. Today's candle didn't really do anything. I think this one looks good. I'm going to be looking at the 190-200 bear call spread. It's probably going to bring me in just under $6 of a credit. So I've got a $6 reward, $4 of risk, basically saying I think it's going to be below 190 in a couple weeks. Even if it's not, if it blows higher, I've got my upside capped off at 200. So again, this is a slightly sideways bearish trade here on EL Estee Lauder. Let's talk about tomorrow. Look, I know you may not feel like buying here after the dumb, stupid rally we had. And look, I'll say it was stupid, but guess what? It didn't matter. If you were long, you were very happy. I'd rather be happy and stupid than sitting on the sidelines or short and sad. So look, this is a bull pullback. In bullish markets, you buy bull pullbacks and you buy high bases, period. If we get a confirmation candle tomorrow, it's a buy signal. It doesn't mean it's a guaranteed win. It just means it's a really good buy signal. And if you do those all during bull markets and the same on all during bear markets, you're going to make a lot of money trading. You have to get to the point where you're trading the market in front of you, not your opinion. Not the market you want it to be, not the market you think it should be. The market that is. And right now, the market's telling you this is a bull pullback. Really only one economic report, this flash manufacturing PMI. No one cares about it. We do have 2 other central bank speakers tomorrow. Guess what? No one's going to care about it. The Fed already told us they're raising rates more. Powell told us this week, yes, we were serious. We're raising rates more. The market didn't care. You think 2 other guys from the Fed that aren't as important as Powell, them saying we're going to raise rates more, is finally going to get the market to back off? No. Expect them to be hawkish. The market doesn't care. Tomorrow's going to be a big day. We'll update everything on the trading room over the weekend. If we get that confirmation candle, we are going to have to go back to a more bullish stance like we were 2 weeks ago. Again, we just backed off a little bit this week. We'll go right back to a more bullish stance if we get that confirmation candle tomorrow. This is the Market Roundup. Goodbye, everybody.